Traders, this is the weekend edition, the worst week we have seen since 2008. This video is good through March 22nd, 2020. We wiped out 3 years of bullish gains. The markets end in bloodshed on Friday yet again. Guys, this is becoming the norm, and I don't want to get used to this. The diamonds were down right around 900 points. Spiders down. Look, 4% down, 4% down. NASDAQ, 4% down. Financials, 3.5%, but small caps only down 2.6, leading charge to the upside, if you want to call it that. US dollar down. Crude oil down 8%, guys. Crude oil is at 4.94. Are you kidding me? Silver bouncing 2.7%. Gold bouncing 1.5%. The VIX dropping 8% at 66. Are you kidding me? The last time we were there, 2008, when we were hitting these numbers. Guys, this is insane. Bitcoin coming back higher. We're at 62 at this moment. Look at the markets as a whole. And let me slow it down just a hair. The worst week we have seen since 2008. A significant drop. We dropped into a bear market in 19 days. The only time that we have beat that trajectory to the downside was in the Great Depression, the market sell-off. We have not seen anything like this in our life. This is unbelievable. These are historic times. If you don't know who I am, I've been trading in the live markets 22 years using technical analysis. Been investing far longer than that. I don't count that. I'm 46, award-winning trading mentor from the Rich Dad Poor Dad organization, and in 2007 became a competitor. Went #1 on Google with our company. Free onlinetradingeducation.com. So feel free to subscribe. You don't see ads. We don't put out a bunch of ads everywhere. We are just traders. Looking here at the S&P, there's the biggest drop we've seen since 2008. 2008. Down, 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 down. Looks like at the trajectory we're heading down, looks like a V bottom, like we could get a bounce. If we do get a bounce, it's going to be a significant bounce that will last several days to the upside. Several days. But this market is broken. Do not believe we're going to go back into a bull market. It's not going to happen. This is a broken market. Broken. Any rallies you see will be dead cat bounces. So do not at all get excited about that. Listen, man, mortgage rates surged to their highest level. Highest level since January. Now that's even though that the Feds dropped the interest rate to almost 0 to 0.25. Interesting. This is the largest increase in mortgage rates we have seen since 2016. Markets drop. The S&P. Now, what I'm looking for here, and I want you guys to know this, this is an EMA. You can see my EMAs and stuff right here. Zoom in. I'm using TradingView. TradingView is my charting of choice nowadays. There's a link down in the description. Use that link. Go check it out. It'll get you right where you need to go. But this EMA is what I'm looking for. If we stay below that, we need to stay short. That's if you're an advanced trader. You want to be short. But as soon as this thing pops up, you need to cover those shorts because you'll have your head handed to you on any sort of V-bottom type formation. If that happens, you're going to see a big rally to the upside. Look for 50% of that. I mean, spiders at 228 could be at 300 before you know it. Whatever this looks like, that could look like right here. That would be about a 50% Fibonacci retracement there. So that is interesting. I want to show you something here. If I go over to the weekly chart, this is the weekly. Every bar is a week. This week we broke down below that. That is bad news. Do not like that we broke that major trend line. Major trend line. And we're below big red here. Big red, that's the 200-day moving average. Oh, that's just horrible. Horrible. I want to look here at the diamonds. Diamonds look exactly the same. I really thought Thursday we were going to see a pop and go higher. So actually I bought IWM, the Russell's 2000 on Thursday, but I had to unload them on Friday because we did have an initial pop to the upside. So I did take some profits, but it wasn't anything like I thought it was going to be. So I had to get right back out. People keep selling into that strength that we're seeing. That's a bad sign when smart money is doing that. NASDAQ is building a low base, guys. This low base formation is ominous. This is a great area to be looking to short. The Russell's 2000, this is what on Thursday I saw almost a tweezer bottom and thought, so I entered Thursday end of day. And when I entered that, the very next day we popped up making a higher high, which it's been a long time since we made a higher high. Last time we've made a higher high goes back to March 20th. March 3rd, 2020. Last time we made a higher high. Other than that, we have lower highs, even highs there, lower highs, lower highs. So the day after I went long, it popped up. I was happy. But when I started seeing it sell off like this, when people started selling it, I just sold. So I took a profit. It wasn't a big profit. I thought we were going to bounce and keep heading up. This V bottom was going to be put in place. So I would have exploited that opportunity for a few trading days before I'd go short, right? Because that's what I'm looking for. Down, a pop, and then short. Here's the financials. The financials starting to build a low base, guys. Be very careful. Very bearish. US dollar came down, did a jab, and did what's supposed to, blasted through. This is, look for it to maybe pull back a little bit, look for another long opportunity. Crude oil just is horrible. I'm watching the EMA and see how this thing's how it's gonna play with this. As long as it stays below this, you could be short. Silver had a pop, but it could be short-lived. This is a good time to be buying silver and gold, really low prices if you're a long-term holder. Gold is building a bearish pennant. So these are bearish formations, guys. They're bearish formations. Unless you're highly educated, you don't want to be going in and out too much. Either make a purchase and just stay with it, or be nimble in and out, but you got to be highly educated to be able to do that with confidence, or you'll have your head handed to you and you'll just pay us money. I mean, it is easy money to be made out here, out here in the markets, because people are being led by their fear and greed, and we're exploiting that. These movements are just a gift. We love this stock movement. The VIX hit an all-time high. Last time we were here was the highest the VIX has ever been in history, and that was in 2008, around October 2008. The highest the VIX has ever been. Guess what? We're there now. That's where we're at. We're at that exact place, and it happened in such a short amount of time. Just a few weeks, and we're down. Bitcoin up, but this is a bear pullback. Could be another short opportunity. We have to watch this. Bitcoin's in a lot of trouble. I want to go to some stocks of interest. Now listen, I just want to say this with you guys. Go to Grok Trade, get your information on education, do that stuff. What I'm sharing with you, we're educators only. We're not financial advisors. So don't mess that up. Grok Tech stocks. Grok tech stocks. I just came out of the. We're doing our mentorship this weekend. So big class. There's 14 in this class. This is one of the biggest classes we've had in a while. Big class. Everyone's interested in learning how to trade this market, and you should be. Man, the money is insane. You should be interested to be mentored. And anyway, they're all in this class, and so I sat with them. Mark teaches it. Mark Meerkat. He's the only one I would let trade my own money. He's a brilliant trader and a day trader at that. But let's go here and look at some stocks of interest. Oh, I want to show you something before I do this. Guys, I'd be remiss if I didn't show this to you. And you'll want to probably show this video. If you go to the NASDAQ, and now I'm going to go to the weekly. I got to show this. Look at the weekly on the NASDAQ. The Q's right at a major area of support, guys. Let me share with you the points. We have 3 points. The more points it hits, the more valid it is. We have point number 1, February in 08. And then a second point right here, June 2016. Or February 2016. June 2016. And then December 2018. Okay, those are the 3 points. And that's right where we're at right now. Every time we got to this line, we bounced. Will we bounce? Will the NASDAQ bounce? If so, look for the markets to follow suit and look for a V bottom to be put in. You'll get a nice opportunity to go long for a few days at least, I'm assuming. You have to be nimble and have your stop losses well managed, perfectly placed, or you will lose money. Bounce up, give me a 50% Fibonacci, sell the puddings out of that, because that'll be another sell opportunity, and look for another wave to the downside, and we make money. I love the fact that we can build in our accounts in a bear market. I love that. There's no better business model out there, period. You can't do that in real estate. You can't make money when it goes up and when it goes down. Can't do that with traditional business. And I love traditional business. I'm an entrepreneur. I own all sorts of little businesses. Love it. It's a great hobby. No better business model than trading. I can be in and out of risk at any time. All my dollars are employees. My employees have to be making me money, not losing me money. I can be making money when the market goes up, making money when the market goes down. Anytime I can trade anywhere. I have internet access on a beach, at a hotel, on a ship. Not really. Ships are hard, man. I tried to trade off a ship. Does not work well. Not the cruise ships. I tried. Doesn't work. And camping. I don't get reception when I'm out camping. People, all my trader friends tease me because when I go camping, I bring my laptop to trade. So, anyway, it's just hard not to make money, right? It's hard not to. Okay. So I showed that to you. Let me see if there's anything else that jumps out at me on the weekly. The markets are silver broke a major area of support on the weekly. Just not good. Gold's hanging in there a little better. At a big area of support for gold, guys. See this huge area of support. Look for a bounce. I think it could happen. So let's go back to the stocks of interest. These are tech stocks that we're looking at. These tech stocks. I'm just telling you. I can't think of any I'm long on right now. But this is more of a short opportunity, or be cash. This is the environment we're in. So we're gonna go with Apple. Take a look at Apple. Apple broke a major support line. Major support line. But I want to show you something on the weekly. We smashed the weekly. We're right at it. If we're gonna bounce, it needs to happen now. This goes back 2018. This is December 2018. And this is May 2019. And that's right where we're at right now. So if we bounce, we're going to get what's called a jab, because we're down below the daily right here. Do you see this? I'm getting geeky on you. and that means we'll immediately rally back. If so, look for a significant, because usually after jabs you get a big run up. Okay. Get a big run up. AMD, it's just so many short opportunities. Amazon is remember that V bottom I'm talking about? You go down, you bounce, you go up a ways, and then you have a bearish engulfing. Look to short this to the downside. That's Amazon. Baba bounced off of support, but I look for that to drop. If it breaks down below this trend line, that's a short. Baidu, stay short. Watch this yellow EMA. As long as it stays below that short. Booking, same thing. Yellow EMA, stay below it. Cisco, it popped up. Do you see this? Bearish engulfing, look to short. Cisco. Catfish, bearish. This thing's getting ready to drop lower. eBay broke a support line. See that? So it's broken. It's done. It's broken. This is daily chart, guys. As long as it stays below the yellow line, I'm happy. On the Google, Google with an L, same thing, short. GoPro, there's the bounce. It looks like it's starting to drop. We have a bearish thrusting pattern right here. Microsoft, low base, it's in trouble. MU, it broke support. Now it ran up, and support's acting as resistance. Kind of a thrusting pattern right here, and it's a great place to short. But we have earnings coming up. That's what these E's are at the bottom of my trading view chart. Those E's mean earning. Never hold over earnings. The rule of thumb. Netflix. Here's that V bottom I was talking about that we might be seeing soon. Down, down, down. V bottom. Up, up, up. Now what was support is now resistance. Look to short Netflix. Nvidia, even though everyone's watching Netflix, but Nvidia, long as it stays below that yellow line. Oracle, what in the world? Very interesting here, guys. Stay away from Oracle. That is an odd pattern. This is very, very odd to me. It's hard to explain. I'm not going to take the time to explain this to you. But what an interesting, I could spend a half hour talking about everything I'm seeing on that one. Oracle is a very interesting beast. I'm going to watch this to find out what I can learn from this pattern right here. I've been looking at patterns for 22 years. 22. There's patterns that I thought I made up that were mine, and until later I find out that they're not mine. I don't know if you can see this. Japanese Candlesticks by Steve Neeson. It's a big yellow book. And then I found out that that pattern wasn't mine. It's called the Three White Soldiers. And Three White Soldiers, it was named already, but I thought I stumbled on it. And anyway, I digress. PayPal's just down, down, down. Looking bad. Roku is a purdy, that's Southern talk. Bear pullback with the doji, reward to risk. Roku, 301 students, 401 students, be watching this. Shopify, under support, now resistance, short. Snap, same thing, reward to risk ratio to the downside is great on Snap. Tesla, bouncing right off of support. It's interesting. Let's see if it can keep going higher. Twitter is bouncing a little bit. Look to short Twitter. Monologue time. One thing I do want to know in the comments is this. I would really like to know how life has changed for you. We're all on islands by ourselves right now. We are all dealing with this COVID-19 virus, the coronavirus. This virus is shocking the world. This is historic what we're experiencing. We're all shut up in our homes for the most part. I just want to know how life has changed for you, because we all want to know. Let's share it with each other. With us, it didn't change much. We're an anomaly. What I mean by that is I stay home to work. I'm here with my trading desk. I got 4 monitors that wrap around me. So I get the benefit of being at home. That's trading business that affords me that luxury. I work when I want to. My wife is a homemaker. She doesn't have to work. We're blessed for that. And we used to go, our daughters used to go to a private school. The private school went under. It was back during when the markets got really bad. And my wife said, a bunch of the ladies are going to try to homeschool. I might try it. So she tried homeschooling, fell in love with it, and now we homeschool. Our family is together 24/7. Very little has changed on our end, other than the fact that I like to work in libraries and go, get off campus. And I travel quite a bit. My travel has come to nothing. I'm not getting out of the house too often. So that's how I change. How have things changed for you? I'm very, very interested in that. And I'm seeing people talking about how their lives have changed. Let me know how it's changed for you. I'm very interested in reading your comments. If you are a 301, 401 Grok graduate, meaning that you've gone through our mentorship, we do have a exclusive, super duper uber exclusive Facebook group just for highly trained, or not highly trained, you are highly trained, but for Grok graduates. Look up Grok grads on Facebook and you'll find us. And you'll have to answer some questions to get in to make sure you're validated to be part of that group. And we're in here talking about trades, what we're seeing. So to help with the community, that's what we're doing. And thinking about doing a Zoom club for everybody. If everybody wants to join part of this club throughout this time we're in quarantine, I'm thinking about firing up the Zoom meetings. If you are interested in hanging out with a trading club and us just spending an hour, maybe an hour and a half, two, I don't know, just going over the markets and doing a club thing. We'll do some training and teaching. Let me know you'd be interested in that. If so, we might do that. We might do a club every day at a certain time each day. Maybe, in the evenings when the markets are done trading, just to hang out. I don't know. I'm just thinking out loud. I'd like to have your feedback on that. I do want to share this, that I have an opinion. I am an educator. Educator. I'm not a financial advisor, and that's by design. Matter of fact, I could no longer trade with my institution. I'm a former institutional trader. I could no longer trade with the institution because they were forcing me to get my Series 65, Series 7. I did not want to. Why? Because I talked to the SEC. The SEC, when I started my company, I talked with two of their counselors. They're not counselors, they're attorneys. They are counselors, but they're attorneys. One of them is an enforcer for the SEC. So I'm talking to some big dogs. And after a good hour of discussion, they suggested, they can't recommend, but they suggested that it might be better for Grok Trade to remain as educators, not financial advisors. So we're not like under their umbrella, right? Under their jurisdiction, their bureaucracy, the red tape stuff. So we go overboard saying we're educators. So there it is. Like, just because that's what we are. Seek financial advice from a professional. Oh, I shouldn't laugh at that. Okay. Oh, brokers make you a broker. Right now, your brokers have you sitting in your funds right now. Right now, every time you look at your quarterly statements, you're popping Tums. You're drinking Maalox. Right now, you've lost 3 years of bullish gains. I mean, now I'm jumping on a soapbox. All of a sudden, now I'm getting worked up. Brokers are not, as a whole, educated enough to be able to properly manage accounts. They can't do it. They are brilliant in a bull market because everything goes up when it's bullish. Everything goes up when it's bullish. But how many of your brokers called you and said, let's go to cash 2 weeks ago, 3 weeks ago? Not one. If so, I want to know them. If you're a broker that 2 weeks ago, 3 weeks ago had your people go to cash, I want you to tell me down in the comments right here, and I will send business your way because you are a genius. Most brokers are not technically savvy. They don't know what it means when support levels get broken. They don't understand that. They don't see it. They don't grasp it. It goes beyond their understanding completely, and it goes beyond how they were trained. They were trained to be glorified salespeople. Brokers, I applaud you for being in the financial business. I have many brokers, I know you're listening right now, who have come through our mentoring program. Guys, you are the ones I want to send business to because you understand technical analysis and you understand fundamental analysis. You understand psychological analysis. That is the threefold foundation you need. If you don't have a full understanding of technical analysis, fundamental analysis, psychological analysis, if you don't have that, you don't have a steady trading foundation to grow from. Period. You have to understand those things. Those brokers that understand it, guys, those are the ones you want managing your long-term retirement accounts. If you can't do it yourself, let them do it. Let them do it. But brokers they're brilliant in a bull market only. Brilliant. But in a bear market, they allow your money to drop. And then when you call them about it, they just say, stay with it. The market always comes back. Well, it has. It has. The part that irks me is if you go up and we do go through a 3-year pullback, if that happens, in that 3-year pullback, and you absorb that drop, you absorb that, you have to make that back up. If you look at the numbers behind that, if you drop 50%, if you have $100,000, okay, go up $100,000, you drop 50%, you're at 50 now. You lost 50%, but now you have to gain back 100%. Do you see what I'm saying? If you're at $100,000, the market drops 50%. Now your account has to double to get back to break even. Are you starting to understand buying and hold is not a strategy? It does not work. In this market, you guys have taken a hit, and it makes you sick when you look at your account. Guys, I get it. I've been there. Matter of fact, when I first started trading, before I was educated at all, I blew through 2 accounts. If you haven't lost money in the markets yet trading, it's not fun. It's not fun. I dropped $21,000 from my trading education through a company that had mentoring. Because of that, I went with them. 21,000. Nowadays, they're charging more than 25 for that level of trading education. Can you believe that? That's like 1 year going to a university with room and board, right? And I'll tell you, I'm all over the place. I would much rather spend my money in something that's going to help me get a return on my investment than another year in a university. Don't get me started on that. Brokers are saying this: keep buying as it drops. Cost averaging to the downside. Yes, in a bull market, that's brilliant, brilliant method. In a bear market, that does not work. We have gone up 11 years in the markets. 11. That means we could pull back a good 5 years, guys, if we stay with the norm of price action movement that we have seen in history. Normally we're at 5 years and we pull back 2 to 3 years. So let's just say 2.5. You go up 5, you're down 2.5. So you 50%. Now we dropped more than that. We dropped 65% on the technology bubble. When it dropped, we dropped like 78% when the financial, so think about those losses. Those losses take forever to make it back. Those losses that we got in that where we were in 2000, it took us forever to get back to those levels again. Decades, right? Over a decade. For us to just get back to break even. Fortunately for us, we had this amazing, historic 11-year run. So now the rubber band's snapping back, and it's doing it with velocity. It's snapping back. This, I believe, is the start, more than likely, to the much needed, healthy, recessionary pullback that the market needs. Now, ideally, what I would like to see for the healthy economy is that we start to bounce back and then we chop for the next few years. We chop sideways. In essence, we'd be building a high base to launch from. That would be ideal. Let us catch our breath from the last 11 years and chop sideways. And let's do a lot of day trading and swing trading in that environment to make our money. People who buy and hold will never make money in that sideways chop going sideways. But if we can get that, that's a best case scenario. That's a flying plateau. Then we launch from that going into the future. So right now it's 2020, maybe if we get into 2024, 2025, we get into that area and then we launch from there. We take off. Now I can see that. The other thing that I can definitely see here is we're at the start of recessionary pullback that won't last just 2.5 years because we didn't go up 5 years. We went up more than 10. Okay, we went up 11. So we should drop 5.5 years. Statistically, that's the norm. 5.5 year pullback will feel like if we drop for the next 5 years, guys, it will feel like a bloodbath. It will feel the pain that America will go through will be significant. I'm not here fear mongering because I hope that doesn't happen. Hope that doesn't. If we can get our debt taken care of, we need somebody to say we have a debt issue and we're going to fix it. That's what I need to hear from the politicians. I need somebody to say we have a deficit growth problem. Here's my plan to fix that. You got to run business pragmatically. There's business principles that help a business get strong. Trading, you got to run trading like a business. You have to run the government like a business. You have to run it all. The principles are all the same across the board. So the markets, the idea here, everybody's wanting to know we're in the bottom. We could have a short-term bottom get put in place and we could get a nice rally. I don't know when the bottom is going to happen. Everyone's asking me, when's the bottom going to put in? There's several things you have to look at to know if the bottom's in place, okay? Where you can buy back in and just walk away. There's several things you got to look at. We teach that in our mentoring. Every person needs to have the ability to technically get in at certain areas and get out to maximize profitability. Everyone needs to have that skill set. Whoever reads the charts the best wins in the market. Let that sink in. Whoever understands technical analysis best wins in the market. Whoever understands fundamental analysis the best wins in the market. Whoever understands the market psychology, personal psychology analysis the best wins in the market. Those individuals are highly trained machines to do and to exploit awesome opportunities in the market. There's so much money, guys, flowing in and out every day. There's people profiting and people being victimized. There's winners and losers. For us, for anybody associated with Grok trade, we need to be winners on a consistent basis, making money when others are losing it, keeping money when others are letting it slide out of their hands. We need to be the individuals who are capitalizing off of this volatility where we're not scared. This is the masses. 99% of everybody out there are scared with these moves. 1% we get excited. I had a couple comments on there. It's like, hey, pretty excited there for such a bloodbath. And I'm trying not to be insensitive to money's loss, because I know that's factual and that's not a good thing. It's hard to contain what we're the good that comes from it too. I'll just say it like that. So that's it. Be safe. Stay indoors. If you have a mask, wear it. Wash your hands. Stay 6 feet away from everybody. Look at fogging up my glasses. Yeah. Take care, guys. I appreciate each and every one of you. Like the video, share it, subscribe if you haven't done so. We'll catch up with you guys later. Bye.